Hi, I'm Peter Rose, founder of Longwood Currency Trading. I'm here with my coffee. It's a beautiful spring day where I live in the Lakes region of New Hampshire. It's, getting on toward the latter part of April of 2025. Get the ball, get the ball. Trade for pips, not dollars. That's what the title of the video is all about. Why? Why would I say that? That's what I say to all of my students. So what does that mean? Why not trade for dollars? Isn't that what we're in the business of trading, to make a lot of dollars? Well, that may be the goal, but that's not how you go about achieving the goal. And I can say that with some amount of authority, because in trading a six-figure account, I traded for pips, and I was successful as I was trading for pips. I was up 3 different past years in a row going into the fourth quarter, up 60 to 80% on my account, six-figure account, and not just 100 grand, a little bit bigger than that. But and going into that fourth quarter, I'm up 40, 60%, 80% on my money. And some years I get a little antsy about that fourth quarter. I was doing so well. I mean, I'm up 80%, let's say, 70% on my bank, and going into that fourth quarter. And everybody's jockeying for position in the general financial markets as that fourth quarter moves forward and goes to close, because the whole financial world is based on that year-to-year basis for hiring and planning and all that other stuff. Their financial accounting process may be accrual and may be from June to end of May the following year. But from a general overall standpoint, as you come to the January 1st, that's the end of the year. That's the end of the year when you got to calculate everything up to pay your taxes, right? It's the same thing, sort of, kind of, for businesses, hiring and all that other sort of stuff. What does that mean, Peter? Why are you wasting my time with that? It's because all the markets become very, not only not volatile, but the volatility increases substantially, but so does the unpredictability. I have the ability to say where price will go or should go, but nobody has a way of knowing when that will happen. But when you're when I'm in the general market conditions, I mean, I'm up 80% going into the fourth quarter, 60% going into that fourth quarter. So I'm pretty well guessing where price should go, and you get this general movement of the market, either going up or down or whatever it's doing. And so with a high win-to-loss ratio, you can see where those profits are going to come from. I did that by pips. Going into the fourth quarter, recognizing that I'd like to wrap the year up to some financial goal that I had, some stupid fucking thing. And now I start trading for dollars. Unfortunately, a couple of years ago, that cost me a big six-figure amount of money. And the reason it cost me a big six-figure is because I was trading for the dollars instead of the pips. So when I say trade for pips and not dollars, I know what I'm talking about. Now, there were other things involved in that emotional thing about trading for dollars, because when you're trading with large amounts of money, it gets to the situation where I was involved in real estate, and I'm trading with hundreds and hundreds of thousands of dollars just on an ongoing basis with real estate, having responsibility for managing several properties at a time. And so the risk management of real estate then grabs a hold when you're playing when I'm playing in the currency market. I'm doing big numbers now, hundreds of thousands of dollars. And so my animal brain changes and doesn't become very predictable in the pips analysis, but it goes crazy, and it does dollars. Oh, I want to make $1,000 today. I mean, there were a couple of months leading up to that where I was averaging $2,600 a day, 800 to $2,000 a day. So now, as I go into the final fourth quarter, and I'm not doing that on dollar values, I'm going on percent against risk and pips. I go, Jesus, I made $30,000 last month. Let's see if I can make another $30,000 this month. I'm up about $4,000, $5,000. Let's see if we can make $20,000 this month and $20,000 next month and $30,000, where I might be making $8,000 a month or $6,000 a month going through. Well, let's try to make $10,000 or $20,000 a month. That screws with you. And so in that fourth quarter, I would lose half of the percentage gain that I already made. One year I was up 60%. Let's see. I was up 48%. I was up 35%. I ended up 12 or 13%. And the next year I was up like a 67 or 68%, 60 something in there. And I ended up the year at, I guess, 35 or 36%. The following year, I was up 80% going into that fourth quarter, 84%. And I ended up 46% against my risk. And so I'm constantly hitting that fourth quarter and losing, but I'm still ending up with a large percentage gain on the overall bank. So that's great. So now I go in to a recent year and I think I'm going to do that same thing again. You know, just because you do something and you're successful at it several times doesn't necessarily mean that you should be successful. You got lucky. I got lucky because I changed from good risk management of dealing with pips to that monster of dealing with money. And I lucked out all those times. 10 or 12% up, 30% up, 46%. So I'm going into the fourth quarter and of this next year, and I'm up really strong, again, up about 80%. And I lost that 80% and then six figures more. So I lost a lot of money. And it was all because I'm thinking about the money and not the pips. I broke out of that. And the reason for that is I'm not stupid, but as I was saying, my real estate brain takes over in managing large sums of money in real estate is not the same way you manage large sums of money in currency trading. It isn't transferable. That's like I always say, if you know how to do long-term position trading and then you try to drop down and do day trading, you're going to lose all your money. However, if you do day trading and you decide you want to do a long haul, then you're probably going to be successful at that because those skills of day trading are mappable upward into the longer term periods. You just have to learn the thing the right way. I could go through all kinds of things in life, and that's the way it is, and that's the way it is in currency trading. And so you believe it or not, but that's one of the things that I get across and start talking about in my fast track course program for students is trade for the pips and not the dollars, because once you start trading for the dollars, your animal brain is going to take over. So I made 5 pips today. I made 50 pips today. You need to become consistent with the number of pips that you trade, not the number of dollars that you make. Because as your bank changes, the dollar value changes, and you have to constantly keep reinventing the wheel and rejudging your risk on the position. Let's say I'm trading 2-lot positions for a year, and I build up a certain amount of profit with that. So on 2 positions, so I'm 2 lots. Let's say I make 60% on my bank. So if I have a $20,000 bank, I make 60% on it. I make $12,000. Okay. Now I go into the next year, but now I'm trading 8 lots. 80 bucks a pip. And I lose 20% of my account. I lose $16. I've just lost all the money that I made all year last year, maybe one trade. So you have to be careful about thinking about the dollars, because it doesn't give you the foundation that your trading plan is based on. If your trading plan is based on dollars and making dollars and setting dollar goals and all that other kind of stuff, if that's part of the structure of the framework of your trading plan, then you're not going to be successful, because you can't keep track of those dollars. So that's the advice, is take that right out of your brain and trade for pips. And then don't lose six figures on your freaking account. I have to have a cup of coffee with that. And go back to my trading. I'm up 0.3% on my bank, but I did it trading for pips. And all I was doing was having fun, knocking down a few pips. That's it. I mean, I ended up a % gain for the day so far. If I can make 0.3% against my bank, if it's a $1,000 bank, I make $3. If it's a $10,000 bank, I make $30. If it's a $100,000 bank trading 10 fulls at 10-to-1 leverage, it's $300. Some people don't make $300 a day. $300 a day is $60,000, $70,000 a year. But it's the same 0.3%. It's the same 3 pips. So when you can get your mind acclimated to not worrying about the dollars take care of themselves. You have to learn to be consistent in your trading and grabbing a guaranteed, so to speak, number of pips that will give you that 0.3 or 0.5. It just depends on where you're at in your trading. As you start out trading, you should have a 0.1%, $1 on a mini account, $1,000 account. It's $1. So you trade all day to make $1, or you trade for 3 minutes to make $1. When that's happy, you say, oh, look how easy it would be to make 3 pips. So I make 0.3%. Well, look how easy it was to make 8 pips. Oh, wait a minute now, it isn't so easy to make 8 pips. I'm losing a lot in there. Oh, okay, well, what was really easy? Well, 0.3% is 3 pips, right? So on per 1,000. So if I'm trading a $10,000 account, that's 30 bucks. 30 divided by 10,000 is 0.3%. So that 0.3%, if you could make that every day, let's say you do it 3 days a week, that's 1% a week, just shy of 1% a week, which is 4% a month, which is 44% return on your money on 3 pips. So that's an easy amount to make as long as you're not worrying about the dollars. But as soon as you start worrying about the dollars and you've got you're $1,000 up on your position, you're 40 bucks up on 50 bucks up on your position, trading small lots, maybe you're trading 3 fulls or something like that, 2 fulls, and you're up a couple of $100, and you go, shoot the potatoes, I want to get $300 today. You're going to lose that. It's going to go against you. How many pips have you made on that trade? It's on a per trade basis. As a day trader, I generally make 1 trade. And my base that I look for is about 0.8. That's what I'm looking for. Whether I get that or not, that's a good goal to shoot for. But if you're just getting started and establishing consistency in your trading, then 0.3%, 3 pips on whatever bank size that you're trading. So when you get in there and you've got the 3 pips, it isn't, oh, it's just so much money. It's, oh my God, the price has gone against me 3 pips or 4 pips. I'm out, because it's not a lot of money. It's a small pip loss. And you go back in and try it again. That's just the way that your mind has to learn how to function in order to implement the correct risk management principles that I teach. Well, if you don't have good risk management principles, then doing this isn't going to make any sense to you. That's why you have to take a course. You have to get somebody to mentor you in order to put you in the right framework. If you were in the right framework and you were making tons of money, you wouldn't be watching my videos, because I'm trying to help you get going on your trading. I mean, I can't help you if you're a rote beginner, unless you want to take a beginner training program for me. But how do you know if you're serious enough about it or not? To work with me is a lot of money. So you want to spend that amount of money because you're going to hobby trade with a $10,000 account, trade one full lot. I don't think that's going to replace your job income. So I'm working with folks that have 6 months to a year of live account trading, maybe 200 or 300 trades during that period. So you have the experience to judge what you're doing, and you've been able to develop a set of metrics that we can look at then when you come in and start working. And I can look at those metrics and I can go, oh, okay, well, this looks like where your problem is. Let's take the fast track course. Let's get to that part. Let's look at that. Now let's go back in the fast track course and see how we led up to solving that problem. And that's how I work with people. It's very difficult to work with you if you don't have any experience at all and you're just jacking around because you see some fool that makes $3,000 a day and that's what you want to do. But how are you going to do that? I don't know. I don't know how you're going to do that. All I can advise you is to trade for pips and not dollars. If you'd like to discuss this or whatever, send me an email. I'd be happy to do that. There's nothing I can tell you of value in a comment. And I wouldn't do that anyway because I don't know who you are. I don't know what your goals are. I don't know what your background is. So what I would tell a 24-year-old might be different than what I would tell a 54-year-old. And so I can give you general advice in these videos, but if you need clarification on it or specifics, you got to send me an email and maybe I can help you. Get to know you a little bit. We can chat about it. Have a video conference and no charge. That's fine. I'm not working. I'm not training a lot of people. I'm retired. I've got time that I can answer some questions for you and hopefully get you on track. But if you start asking multiple questions and you're looking about, well, how do I do this? And when do I do this? And how do I arrange that? You need to take a course. There's just no way around it. You're not going to learn how to drive the full spectrum of a car by learning from your dad. You need to learn from somebody who has taught people safely how to drive a car. That's why you get a driver's license, you have to take a driving course in order to pass the driving test, which tests you against the stuff that you learned at the driving course, not what your dad did, who has 5 moving violation tickets. When you are looking at trading the currency market, you have such a tremendous opportunity to make 0.3% of your money a day, every day. But with that comes the danger of losing everything in one trade. So risk management is at the height of your concern. And this is one of the cornerstones of that risk management that I teach in my coursework and through my mentoring. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.